Hello, Jim here. Due to the correction recently, we've got a couple of stocks that have been hammered. I believe they're at great prices. And they're not only at great prices, but they're great companies, good fundamentals, and they're also very good for trading options. Today, I'm going to share with you two, possibly three, and why I like them so much and how they can potentially earn you a huge amount of money. So stay tuned. I think it's going to be well worth your while. Now, the first company I want to talk about is Celestica. I've talked about them in previous videos. This is CLS. And you can see, if you look at literally the last 5 days, they're down almost 17%. There's really no news that I'm aware of that's come out about them. So it's primarily related to the market and probably maybe some margin calls caused them to drop sharply. Um, it's been a long time since they've been in this range. You could definitely do really well with them. If you look at profitability, it's a B minus. So profitability could be a little bit better, but they've got good cash from operations. They have fairly good return on assets, return on capital, and then return on common equity. So their margins are a little bit low, but to me, that's another plus. If they're able to do this well with low margins as they increase those margins, which I think they will over the coming years, they could potentially grow quite a bit. Now, if you look at growth is also pretty big, A minus, so earnings growth looks really good. And then just general revenue growth looks good, 21%. Valuation, A minus, so they're definitely not overvalued in my mind at least. Their total debt 931 million. They're around a $10 billion company. They have 429 million in cash, so they have a good amount of cash and they generate quite a bit of cash flow. Now they don't pay dividends. Now if we look at earnings, they actually had pretty good earnings back at the end of January. And you can see they're increasing their earnings quite nicely. So increasing next quarter by 29 year over year percent higher than 26, then 20, then 17. If we look at the earnings estimates, they're projected to do 580, well, 483 this year, which is a 17 PE. Next year, 589, then 705, and then 930, which is almost double what they're making now. So, and then financials, let's see. I'm curious if they're buying back shares. We'll come down, look and see if they're buying back shares. 116, 119, 116. So and then 121 and 119. So yeah, they've been buying back shares, which is a really good. You long-term companies who buy back shares, you can end up doing really well. Now, let's look at them in bar charts. And if we look at CLS, let's look at their interactive chart. And you can see right now they're all the way down here. Yeah, that's 81, 82. So they're down here. They're definitely towards the bottom of their Bollinger Band, the lower band. And then if you could sell a put in this range, maybe in the low 70s, it's a really good spot. Let's look at their option prices and volume, just get an idea. So let's go to monthlies just so we can see what monthlies look like. But you can see they've got open interest, looks good. This is calls. So they also have plenty of volume for calls and open interest, and also really good open interest for puts. It looks like 208 for open interest, 336, 22, 12 volume. So, and I've found their premium is really good. I've been able to pick up a lot of premium when I've traded them before. Now let's look what a trade would look like for them. So this is a cash secured put. This is based on data that came out on Friday. This is their current price of 81. So let's just say we wanted to open a position. During this market correction, it's probably wise to go out a little bit farther. So we'll go out to 516, which let's go a bit lower. Let's see if we can get them at 70. Yeah, I mean, look at this premium. The bid is 440 and the ask is 480. which is quite good. We can also expand this. We can see that's a 24 delta. So you might say, well, I typically like to do a 15 delta for these kind of trades. So if I look at 65, that's pretty close. These are $5 spreads between the strikes. So a 60 is 12, 65 is 18. So I'd probably go with the 18. This is in 47 days. So it's in that 40 to 60 day or 30 to 60 days. I'll go out as far as 90 days. So um, looks good. And that's still bringing in 310. Now, if I wanted to see what I could do, and I typically tell people that it's wise to see what it costs to buy the downward protection. I usually go about $10 out, which would be 55, and I would pay it between $1.25 and $1.35. And for one contract, I'm still bringing in 190, which is really good. So you could bring in twice that, or not twice that, but around $300, between 310 and 330 on a cash secured put, or 175 to 205. Now I will sometimes look, since these are so spread, I doubt 60 would be cheaper. Yeah. So if we went to a 55, um, yeah, so you can see you do one of those. I typically do two contracts, so that would bring me in around 380. A lot of times I will start pretty close to the ask, so I would look at 204 probably, or 202. So I'm bringing in literally $404. I am spending a fair amount for the puts. In this market, if we do go into a bear market, that put will become worth more and more. 65 is an unbelievable price to pick up CLS. But if it dropped all the way into the 50s, this $55 put would become worth a lot, and you could sell it and lower your cost basis. So that's why I like them. They're probably one of my favorites right now. I'm a little shocked how much they've dropped recently, but I do believe it could potentially be due to margin calls. And like I said, I haven't found any particular news on them, but they can move up as quickly as they move down. So I wouldn't be surprised if they get a bounce here pretty quickly. Now, another stock that I really like is AMD. A lot of people don't particularly like AMD, but they've also been hammered. It looks like futures are down, so potentially this is the 30th of March. So the 31st, it looks like the market's going to continue on its downward trend. You might ask, well, why do I like them? What's the big? So their profitability is good. Their growth is very good. Um, so their earnings growth, and so is their revenue. They don't pay a dividend, but what I like to look at is earnings estimate. So if you come out here, they're growing 41%. So they have a 22 PE, then 33%. $6.25 is what they're going to earn. Then 756, again, up growing 20%, almost 21. Then growing again 30%. So their earnings per share would be just shy of $10, which is double what it is today, and it drops their PE, so they could easily double in the next 3 years. And then in 2029, they have another growth year. They'll be nearly $11. So I just think they could grow really well over the coming years. Now, they do have a number of chips that are coming out soon, so they may turn around. They may get a bounce later this year, um, depending on what happens with the market. If we turn into a true bear market, it's pretty much, it sinks all ships pretty much. If we get into a true bear market, they could continue to go down. So I think in the short term, I wouldn't be surprised if they drop even more. And if you don't own any shares, I own 100 right now, or 200, I might buy more. I do have a cash secured put that'll probably be assigned. I might end up buying more if they drop into the 80s or 90s. I'll probably buy another 100 or 200 shares to lower my cost average. If you don't trade options much, you could actually dollar cost average into it, and then at some point, I think maybe late this year, they could be a $150 company. I wouldn't be surprised. They were much higher not long ago. They were up 180. So I mean, to get back to 150, I could see that happening. Let's look at their bar chart. Let's look at AMD. And let's look at their interactive chart. And then I think this may be the 5-year. No, this is the 1 year. So they're right in the middle, the bar chart. So if you could pick them up down here, so around, what is that, 90? Yeah, that's like, I think 94. So if you could pick them up around 90, you're doing really well. And it doesn't look like it's too risky. Now, they also have quite a bit of options volume and premium. You can see, yeah, look, 11, 1200. You're talking huge amount of premium. And this is on a weekly. So the monthly would be even more if we went out to the monthly. Yeah, I mean, 23,000. Yeah, so really good option premium and option volume. And let's just try AMD here. I don't think I have AMD. It's one of the choices, but yeah, I have to type it in. And then I just need to put this as a put. And I typically always start it as a cash secured put. So let's do sell to open, one contract. Let's go out to 516, just like CLS. Now let's see, 95. That's a 28 delta. So let's take it all the way down to 85. See what that is. 13. So let's go a little higher. 80. Did I go the wrong way? 80 put. Oh, yeah, I need to go to 90. And that is right at a 19 delta. So I either have a 90 or 85. I think 85 was 13 delta. So depending on if you want to be more risk averse, you could go with 85. In this case, I probably would go with 90. Like I said, I really think they may be $150 stock by the end of the year. Maybe if not by the end of the year, probably early next year. Now you could make between 235 and 240. So you could sell the open one contract in AMD for 90. The strike would be $90. The delta would be just shy of 20, like a 19. Again, if I went $5 cheaper, it was like a 13 delta. This is for 47-day expiration. Talks about the open interest. You can see that's a huge number. You could also see the days range. You could see the gamma, theta, vega. I really like how they've done this. They didn't have that originally. They've only recently added it. Now I can add a leg. So again, I'm going to keep 90 there. I'll go 80. And I want to not sell to open. I want to buy to open. And it's going to cost me between 86 and 89. But I'm still earning 150 on one contract for a 90-80. So there again, if the market keeps dropping, and AMD becomes an $80 stock, this $80 put will become worth quite a bit. And you could, you know, since I want to own them, I would take the proceeds of selling that put and put it towards the cost basis. And at that point, it would be quite a bit. It would probably be closer to $2 or $3. So you would lower your cost basis. And then for this, I would start with 150. I would probably do 152 and try to get that assigned. And if it didn't get assigned, then I would slowly move down. Um, so I like AMD. I like all the different types of chips that they're coming out with. The computer I'm actually filming this with or recording this is a new AMD Ryzen 7 chip, I believe. And I'm really happy with it. It's so much faster than my Intel machine that I also still use. I'm transitioning to this one. With being a software developer and a YouTuber, I have lots and lots of software to get on it, so I'm taking my time to do it. Now, I also provide to my membership, so this is the weekly planning worksheet. I also have an area for favorites, and I update this current price literally every week. So this is updated. So here are some other companies that I believe are at good prices: PayPal, XYZ, which is Block, Square. They recently mentioned that they are cutting over 900 people in their workforce. So, their costs are going to go down quite a bit. Cisco is still a little bit pricey. It's done well. Same thing with eBay. Here's AMD. Shopify, in my mind, still a little pricey. Here's CLS. Met is getting near being a really good price. I like MetLife. It's kind of a little bit something different than just doing technology stock. Here's NetApp. I do like them. UPS has gotten pretty cheap. Nvidia is even not a bad buy, I believe. Let's look at it really quick before we end the video. Let's jump over here. Let's do NVDA. And you can see right now a 24 PE. I don't remember when it's been a 24 PE. And again, you could probably go as low as 100, which would probably lower that PE to like a 22, 21. You might even be able to go into the mid 90s. So this is a pretty good price for them, and no one has the numbers that they have. Now, one thing, and one of the reasons I like AMD is if you look at the earning estimates for Nvidia, looks great this year, looks great next year, but then it slows down considerably. Then they actually have negative. And then if you look 617, AMD by 2029, I think was almost $10. So there's a lot of thought that maybe AMD might leapfrog Nvidia to a certain degree. I'm not so sure, but I do believe in the next 2 years, Nvidia is probably still king of the hill. But AMD over the next 2 to 3 years, and plus the market cap is so much higher for Nvidia. I mean, if you come down to valuation, you look at 2.68 trillion, which I think AMD, let's see what AMD was, 167 billion. So there's a lot of growth here. That's why some people are thinking 150 by the end of the year, and maybe 2 to 300 over the coming 2 to 3 years. So very, very interesting. And, I share this with my community each week. I update it. It's color coded for what I think are good prices. And there's some different companies like T. Rowe Price is here, Fiverr and Bluebird. I do think Bluebird's been over oversold too. So I share this. If you're in my membership, just a reminder, I also have trade rankings, the companies that haven't done well that I've ended up getting rid of or considering getting rid of. I have checklists, guidelines, goals, quite a bit here. In the meeting tonight, we'll probably discuss a lot of this. And here's all my different trades that I'm doing. So that's what I wanted to share with you guys. Let me know what you think. Am I missing some stocks? I forgot to mention Amazon, but Amazon also is getting it at a good price. And there's a few others. If we continue on this downward trend, there may be even better bargains. So try to keep enough cash to be able to take advantage of those bargains. So again, thank you for joining me and taking the time to watch the video.